I am so pleased to welcome Jeff Gennette, Chairman, CEO of Macy's, on a day where your shares are really outperforming. And largely it's about execution in what you call a volatile macroeconomic environment. Is there any sign that that volatility is dialing down, Jeff?
Caroline, I think it's pretty consistent. When we last spoke and what we saw in the fourth quarter, that's continuing. And we're anticipating that those macro conditions are going to play out through the balance of 2023. We're seeing it in savings rates. We're seeing it in credit balances. We're seeing it in just inflation and how it's playing in services and in goods. But we also see big opportunity. And, we can get into that in our conversation.
Tell us about your consumer, because it looks as though you're looking at the luxury end as an opportunity, as a growth vector.
Yes.
Is that how we can class the consumer, that the higher-end luxury consumer is still strong, but more income-strapped are going to find it difficult to purchase in 2023?
Yeah, what we're seeing is that really all income levels are basically at a different level than they were in the beginning of 21. And so we expect that to persist. But certainly the luxury consumer is more resilient. And I think this is going to be a share game when you look at, that it's a crowded playing field when you look at luxury. And it's going to be really incumbent upon retail to have the right product, the right value, the right experience, And I think our Bloomingdale's and our Bluemercury teams are doing an outstanding job. They had record performance in 2022. And I think that they are well poised to do very well with this luxury consumer.
Is that because the luxury consumer can look through inflationary pressure? How much can you pass on costs at the moment to the end purchaser?
Well, let's just talk about when we think about inflation right now. So what I would say is that when you look at across our portfolio of 3 brands, you're going to have modest ticket price increases in 23 versus more aggressive ones in 22. So that's starting to abate a little bit. And so I think this consumer they've got lots of choices. And so I think one of the things that is I'm looking to see where our competitors are with their inventory is we've controlled our inventory well. And I think when you get the environment that is at status with demand, everybody benefits from that. What I'm very proud of is the fact that when you look at our inventory situation, we have the opportunity to chase consumer demand. And we're doing that with slightly higher ticket increases. We're using our pricing science. We're going after demand, be it in casual or be it in career, be it in travel, and to really respond to where the customer is going. And we're doing a good job of doing that in real time. So that we're looking at having open to buy reserves. So each of the merchants basically have the ability to respond to customer demand, and they're chasing after that demand and using our pricing science to get the most out of those transactions.
Dig into that pricing science. Dig into what has made you able to be far more disciplined and execute far more efficiently when it comes to inventory.
Yeah, let me take you back to the pandemic. So in the pandemic, we made a big shift in the way that we do our business with our vendors. We basically went from a model that basically had markdown allowances built into the receipts to a net cost model. So basically, we were reducing the upfront costs that we were basing goods on. The second thing that we did is we went from a functional incentive program where a buyer would get paid based on the performance of their category to one that was enterprise-wide. So everybody benefited from where the consumer went. So those markdowns and those receipts then became available for where the enterprise needed it to go based on consumer signals. Because the second you set a plan in retail is the second it begins to be wrong. The consumer's always voting and you always need to make adjustments. So what we did through 22 and what we really have in play for 23 is buying very conservatively and having open to buy reserve that we then use against how we play with receipts, markdowns, and reserves to customer signals. That's helped us with inventory freshness. So in 2022, we ended the year with 3% less inventory than 21, but 18% less inventory than we had in 19, when we were doing virtually the same level of business. So that gives us huge opportunity to respond to in-season signals from the customer, chase trends, pull back from trends that aren't working as well as we had originally planned. And that's making a big difference in our relevancy for customers that have so many choices.
Talk to us about the choices and indeed how the competitive landscape looks, because as you said, a lot of it's to do with what they're doing, how their discounts are. Do you think that's going to pull back a little bit? Is everyone going to be able to look more at profitability for 2023?
think you're seeing that now. I think you're starting to see, like a lot of our competitors, that we do business against and with, is their inventory is much more in line with consumer demand. So that's a heartening thing for all of us when you see that customers are not having to respond to this glut of inventory that's out there, where the only way to move it is by lowering the price. So I think everybody is getting demand and supply more in status. We're seeing that, and I think all of our competitors are in a similar boat with that. So that's good news. That's good news. And I think the consumer is going to be able to respond to us giving receipts that are more in keeping with what they're looking for. And so, and you're not stuck with excess product that you haven't liquidated yet.
Talking about product, one of the innovations you've had is the marketplace to do with Macy's. You're expanding that. You're looking at the luxury buyer with Bloomingdale's for this. Just explain what this offering provides and how you're leaning into the digital side.
So obviously, when you look at customers, we have many categories that we service them in. And through Marketplace, many more are coming. So in the fourth quarter, we launched the Macy's Marketplace. We did this in September. We've added 20 new categories and 500 new brands as a result of Marketplace. And that gives customers a lot more choices. Example, so during the fourth quarter, two of the hottest categories for us in Marketplace that we really didn't have in our owned inventory from before was video games and electronics. Those are where customers, they trust Macy's as a brand, and so they're ready to transact with us if we have the right content for them. So much of our business starts on digital or is transacted on digital. So to have Marketplace, that a customer, they don't know whether or not it's Marketplace or vendor direct or owned inventory. They just know that when they come to Macy's, they can get a broad range of categories at great values. So that's what we're so encouraged by. So what you heard us talk about today was we're going to be adding 2,000 new brands in 23 on the Macy's side, and we're going to be adding a Bloomingdale's Marketplace in the back half of 23. So it just gives us a lot of flexibility because we're a trusted brand. We're a department store that has many categories and about to have a lot more as a result of Marketplace.
And you've really understood that omni-channel balance. I'm going to ask you there for maybe a bit of a curveball, but maybe one that's being asked a lot more of you. AI, artificial intelligence, it seems to be something that some of your competitors are talking up at least. Is it something that you embrace with Macy's?
So I'll put that in the camp of kind of data and analytics, AI. Absolutely. So when you look at the technology that we have and that we've invested in, and when you look at the science that we have that we're putting against the art of the business, it's the combination of that makes a great retailer. So art and science is so important. Where are the trends going? You can't always see that in an algorithm, but boy, you can look at all the signals. You can aggregate them in real time and what's going on in the balance of the industry. Where customers are, where they are on Instagram, and how they're responding to new trends. And how do you express that in each of your individual brands? What we see is that our customers at Bloomingdale's, they're up front with trends. And when they move off of a trend, you can see where that might cool based on trend curves on the Macy's side. So we're using all of the data that we have. We've built up our data and analytics capability. We built a center of excellence over the past couple of years. That's paying dividends. When you look at dynamic pricing, to be able to scrape the entire internet on where the prices are on commodities. And now in real time, you can make adjustments online and in some respects in store. So we are clearly using, where science is taking us to better respond to this customer who's got so many choices, and they're looking for the best combination of product, value, and experience. And we have a huge opportunity to get that right. And to do that in real time is an important component of who's going to win in retail.
And what about the choices of your people, Jeff? What about your talent? I always ask it.
Yes.
How are they asking you for more money at all?
So look, when you look at what we call our SG&A, we've made a huge investment in our colleagues and our talent. So just to remind, when we started the pandemic, we had about 30,000 more colleagues than we have today. But the ones that we do have, we're paying at very different rates than we did before. So we went to a $15, minimum wage guarantee across the country. We're paying an average of $20 or above for our frontline colleagues. We're giving them free education through our guild program. We're giving them spot incentives through our path to growth incentives. This is making a huge difference in the caliber of talent that we're able to retain. Our turnover is down. Our retention is up. The productivity of those colleagues is up. These are all worthwhile investments. And we see it in our culture poll survey, which is basically we ask our customers or our colleagues twice a year what they think of us and opportunities for us to improve. and we act on that. And almost 90% of our colleagues fill it out. The bulk of those give us very specific comments. They're very happy with the way that they're being treated, but we have opportunities to do even better. So our colleagues are our most precious resource, and they make the biggest difference for our colleagues and how we can get to our overall goal of getting to low single-digit growth with double-digit EBITDA profile. It's going to be, based on the great strengths of our amazing team.
So lastly, fill out a quick survey for me. If you had two options, you're optimistic or more pessimistic, which one would you be ticking?
I'm balanced. I have a lot of confidence in our team. I have a lot of confidence in what we're controlling. I think that the outlook that we're looking at right now is we're assuming it continues the way that it is. But I'm not an economist. So we're always looking at the signals, the macro signals and the micro signals. What I know is that our team is poised and we're ready because of our financial, health and what we're doing with our operational efficiency and our great desire to serve our customers in the best possible way across all three of our banners, to do that in as good a way as we can. So we're very motivated to be there for our customers.
We love how you're here for us to talk about that macro, that micro, even if you call yourself not an economist. I feel like you are in many ways. Jeff Gennette, we thank you so much for your time. We appreciate it, the CEO and chairman of Macy's.